Good afternoon and welcome to Gassman Law Associates' presentation of a webinar, What Citizens Insurance is Doing to Our Citizens and You. I'm Christina Colo and I'm here with Chuck Wasson to go over today's materials and to give an informative presentation regarding the changes that are being brought about by Citizens Insurance that affect our clients and us alike. First, let me introduce Chuck Wasson. Chuck has been working at Sandy Wasson and Associates Insurance since 1992. Before that, he was an insurance adjuster and spent the last 30 days of his adjusting career down in Miami following Hurricane Andrew. After answering the family agency, he began working with physicians, which today accounts for the majority of his business at Wasson and Associates. Chuck has a Bachelor of Science degree from the University of Florida and holds the Chartered Property and Casualty Underwriter and the Certified Insurance Counselor's designations, which are both nationally recognized designations within the insurance industry. So without further ado, Chuck and I are going to begin on this presentation. And Chuck, first, thank you for joining us here. We really appreciate your expertise and imparting your knowledge upon us.
Absolutely, Chris. There's some major changes that are getting ready to happen with Citizens, and unfortunately, I'm not sure. And my concern is a lot of the people out there, a lot of the insureds who are Citizens policyholders, may not be getting the information on the changes that are happening.
Well, it certainly is important. And I see here on slide number 2, we go right into the liability coverage for Citizens policies and the changes that have been brought about. It looks like effective May 31, 2012, Citizens has lowered their liability coverage from $300,000 to $100,000 for new policies and for existing policies effective at the time of renewal. Now, that is a significant change considering the potential for gaps in insurance policies between property or liability coverage and any umbrella liability coverage that might exist that might have a floor. Chuck, now is this something that we really need to look out for here, or how do we handle this potential gap issue?
Yeah, this is absolutely something we need to look out for, because most carriers who write umbrella policies require the underwriting limit to be at $300,000. With Citizens dropping that, what's going to happen is you've got that $200,000 gap in coverage. Worst case scenario, someone's injured on the insured premises, the insurer will pay out that $100,000. The umbrella is not going to kick in until it reaches above $300,000, leaving that potential $200,000 gap. Part of the problems that we see is with Citizens, since they don't write an umbrella, we as agents are forced to go to other markets to get an umbrella, and oftentimes those dates, effective dates of those policies don't coincide. So you could have the Citizens policy renewing at one part of the year, the umbrella policy renewing at another part of the year. So with that change, there could be a time period where there's going to be that gap that there's not going to be any coverage. What we have to do is we have to try to fill that gap, and we either do that in a couple of different ways. One of them, as listed here, RLI, which is a standalone umbrella company. What they've done is they agreed that over Citizens policies, they will drop down and cover that gap. Not all umbrella carriers are doing that. I suspect we're going to see more do that, but until then, there is that potential gap. The other way to cover that gap is to write a separate liability policy just in the amount of $200,000 to cover that gap. Once again, we've got another issue. We've got another policy with another anniversary date, and the insureds, unfortunately, are going to have another policy they're going to have to buy.
That's interesting, Chuck, and as you said, that's certainly going to affect a large majority of policyholders here. Now, RLI being the only carrier that drops umbrella down to $100,000, is that, you alluded to it just a minute ago, but is that something that is really going to see a lot of competition in the marketplace, or is this an area where we're really not going to see a lot of activity on the part of insurance companies?
No, I think we are going to see that, because there's no indication that Citizens is going to make a change and go back up to the $300,000. So I think you're going to see more of those gap-type policies, and also umbrellas are going to drop down. One of the things with RLI is it's not the right policy for every single person. You could have an individual that may have had a claim in the past, or their circumstance may not fit within the RLI underwriting guidelines. When that happens, then we're forced to go to other markets. And when those other markets don't drop down, then we're forced into having to buy that little $200,000 gap policy.
Interesting. Another issue with these Citizens changes is that they do not offer any liability coverage whatsoever for any rental properties owned by limited liability companies. This is something where we have a lot of people in Florida owning their rental properties through limited liability companies for liability insulation purposes. Chuck, is this something that you think will change in the future, or is this here to stay?
Well, I think it's going to have to be something that changes because more people are using this structure in order to, protect their properties and such. There are carriers that will write this, and it's more of a non-standard or used to be kind of like a high-risk company. There are carriers that would do it, but there's an additional premium to that, and those carriers usually are not the most economical or competitive type carriers.
Interesting. Another issue with Citizens policies is that they do not provide liability coverage for any rental properties owned by trusts unless the trustee is a principal beneficiary of the trust. There are maybe other carriers that issue liability policies for this type of vehicle, but Chuck, do you know of any reason why they've gone to this policy?
I just don't think they understand, and I think they just realize that people are putting more of their properties in these type of vehicles. I think that's going to be something that in the future is going to be changed. I know it's been brought up with Citizens. I know they've taken it under advisement, but they just haven't made any changes to that yet. Once again, with these situations, we've got to find those carriers that will do this, and there are carriers out there that will do it. It's just that people sometimes don't want to pay the additional premium to cover the properties that are in those types of vehicles.
Right, right. Okay, Chuck, well, I'm going to move on to the next slide here, and we're going to discuss some other changes that have been made with respect to Citizens policies. The first point here at the top of this slide, other structures coverage is being reduced to 2% from 10% of coverage A dwelling. Now, this is for property insurance purposes. Can you explain this for the layman out there that might not be familiar with this nomenclature?
Sure. Your other structures is generally what you see as coverage B under the homeowner's policy. And all the coverages, coverage A is the dwelling part, and the other coverage are extensions based on a percentage of whatever the coverage A is. Coverage B, in this situation, the other structures used to be 10%. In order to try to cut the exposure, Citizens has dropped that down to 2%. So what you're looking at is any type of unattached garage, any type of fencing, any type of sheds, anything that's not physically attached to the structure is now going to be reduced. So what the insured and the agent need to do is review the policy and see if that 2% is enough to cover those other structures. If not, you can either buy that back or the insured is going to understand that they're going to be self-insuring that.
Now, does that often include garages that are not attached to homes?
Absolutely. An unattached garage will be considered another structure.
That's interesting because a lot of the architecture here in the Tampa Bay area, that's a very popular structure or architecture and format. So that's certainly something to look out for.
Exactly.
Another point, personal property coverage has been reduced to 25% from 50%. And this is, again, following along the lines of what Chuck discussed for other structures, in that personal property policy limits would be a quarter of what the coverage is for the main dwelling.
And this is, once again, a situation where the agent and the insured really need to sit down at least once a year, review the coverages, review has there been any changes. Has the insured's made any type of purchases where, that 25% may not be enough, then they need to buy back up to that 50%. And understand that this is only Citizens. The other carriers that are out there are still doing the 50%, and some of them are actually doing more. So this is a carrier-specific change. What people need to look at is if they go with Citizens, they understand that they're really not going to save any money by these changes. Prices are going to be the same, but the coverage is going to be less. And they need to look, are there other carriers out there? Are they willing to pay that additional amount for these extra coverages?
Right, and that certainly varies from policyholder to policyholder. But again, a great point, Chuck. And here we are in this economy. We can pick amongst competitors, and Citizens is certainly a governmental organization initially designed to provide insurance for those that could not get insurance. It's important to consider their pricing structures along with the pricing structures of other insurers out there. And these changes, of course, remind us of that. The third and final change on this particular slide is the sinkhole loss deductible, and it looks like an increase to 10% of coverage A.
And once again, coverage A is the dwelling amount, which is, so the coverage is, a lot of people when they see deductibles and they see, they think it's 10% of the loss, but they got to remember it's 10% of whatever that coverage A or the dwelling amount is. So if you've got a $500,000 house, that 10% is going to be $50,000.
Interesting. Well, that's certainly, in this part of the state, it's a very hot topic, and it's something that, policyholders need to be concerned with when selecting their policies. Moving on to the next slide here, we have some particular types of property that are not covered, that are no longer covered and are now excluded from a citizen's policy. The thing that jumped off the page to me, Chuck, was the first one. Any structure enclosed by screens on more than one side. That sounds like a lanai to me.
That's definitely a lanai. That's any type of bird cage, any type of pool covering that you got out there are no longer going to be covered.
And is that exclusive to citizens? I believe you could get coverage using other insurers.
Absolutely. That is definitely exclusive to citizens. So this is another situation where the policyholders need to look, are they strictly going to be driven by trying to get the cheapest price out there and understand that in the event, and these are all what ifs, in the event of a loss, that they're going to be self-insuring that, or do they want to transfer that risk, look for a policy that is going to cover all these potential exposures, knowing that they are going to be paying the additional cost.
And likewise, carports and open-sided porches that have a roof covering are also excluded here. And I think the reasoning for this is they're prone to damage in the case of a windstorm.
Well, anyone who's seen videos of storms, tornadoes, anything, first thing you see is those carports are like sails in the wind. Automatically, you're usually one of the first things gone. And when I was down in Hurricane Andrew, all the houses that I saw and all the houses that I did adjusting work for that had pool cages, had porches, had any type of covering like this, every single one of them was gone. And sometimes the way these are attached to the roof, they actually pull part of the roof off, which can cause considerable additional damage.
Wow. And along those lines, awnings, aluminum frame, screen enclosures, it seems like any type of structure or attachment that's not really part of the main dwelling is going to be excluded, that would be attached to it. And, again, is there, I guess there's been a higher than normal loss experience with respect to these particular hazards, and that's the reasoning for this. Back to what I was discussing earlier, Chuck, is this something that we're going to see changes in, or is this what the policy is going to be like for a little while?
Well, what I think you're going to see is on something like this, you're going to see probably some of the carriers possibly following suit, but on some of the carriers, you may be able to buy some of these items back. If you ever talk to any insurance person that's been around for 30, 40 years, what they'll tell you is way back before we were kind of spoiled with the standard HO3 policies that we have now, all these items were excluded. So it's not really new. It's new to the present time of these items being excluded. But when homeowners policies first started, when it was really just a fire type policy, you won't be able to get on these coverage. So kind of what we're doing is we're kind of reverting back to what the old style type policies were. Interesting.
Now, it's come out recently that experts are predicting a more active hurricane season this year than initially anticipated. Would that change these types of policies? If we've had a couple more dormant years, so to speak, will that maybe ramp up coverages a little bit?
Well, I get that often. Here in the Tampa Bay area, we haven't had a storm in many, many years. Even the time in 04 when, the center part of the state, which is usually the best place for carriers want to write, were hit multiple times. People ask, well, we haven't had a storm. Why aren't we seeing, more availability of coverage and better pricing? Well, there's a lot of factors that go into it, and not to bog everyone down with the insurance term, but the reinsurance, so the insurance companies that the insurance goes to, those costs aren't really decreasing, and unfortunately, those are all passed down to the policyholder. The other thing is, being here in Pinellas County, even though we haven't had a storm, if we do get a storm, it's going to be a major hit, and it's going to be a major catastrophe. So the carriers still have that in the back of their mind. Although I have seen a little bit of a few of my carriers that have said that they're opening up a little bit, having a little bit of capacity, but it's really on a kind of case-by-case basis.
That's very interesting, Chuck. Well, thank you very much for joining us today and for providing us with all this information and materials here. You listeners out there, thank you very much for joining us as well. You can go to our website at gassmanlawassociates.com to see our other presentations and webinars out there on various topics. And thank you again for your attendance, and please provide us with any feedback that you have so that we can adapt our process and adjust them to make this more user-friendly, and better for the listener. Thank you to everybody, and have a wonderful afternoon.